Hey everyone, how you doing? So you want to get into that stock market game, man? I don't blame you. Everyone's making money in the stock market these days. All right, so I got you covered here. I've been doing this for a long time. I've made a lot of mistakes. I'm going to help you out. This is for beginners. Even if you're not a beginner, you might want to listen because it is kind of covers some topics that you know, but you kind of keep slipping up on. I know I keep slipping up on it every now and then. All right, so to do this, I'm going to recommend M1 Finance. There is a link below. Luckily, if you sign up with my link, you'll get 20 bucks. I get 20 bucks. I know it's not as exciting as what like Webull promotes. You get a couple stocks, one worth up to 1,600. Let me tell you, dude, you're just going to get a $5 stock that you're just going to. Anyway, again, M1 Finance, check that out down below. You're definitely going to watch this whole video. There's going to be a few big reasons why I'm suggesting that you use M1 Finance. It'll help you avoid one of those huge mistakes that I've made numerous times, probably continue to make, honestly. Then a few other things. The strategy is decades proven to be successful. It's almost a can't miss strategy, so let's get right into it. But Tom, we want to hear a workhorse going to go to $100. Stop listening to idiot YouTubers giving their price targets on stocks. All right, there's two big pieces of advice I can really give you here to get in the mindset and to really get this kicked off right is to start as early as you can and don't have any like real type of debt, especially credit card debt. If you have any kind of credit card debt, you've got to squash that. You know, there's some kind of debt you might have, like mortgage. That's a good debt because you're building equity, and usually your interest rate's pretty low on that. Car, sometimes that car, try and get that bad boy paid off as quick as you can, not be paying interest on that. And really, that credit card debt, you've got to keep your credit cards to zero. I keep my credit cards to zero. I really watch my finances. Do some different videos on that sometime, though. I might have to do a different channel, so maybe further on down the road. There's some really good apps out there that help you manage your finances, like Truebill. I really like that. Check that out. It'll tell you like what bills you have coming up, or you'll notice things like I'm spending way too much money on fast food. Help you knock that down. And again, just start as early as you can. Like even like under 18, I know you're going to need your parental consent. Go ahead and try and get that going. If you're right out of high school, even if you're just right out of high school working a small part-time job, man, all you have to do, this is the trick, just like put an amount that you want to start with, like whether it's like save up to $100 and make that your initial amount, right? And then just figure out an amount that you're going to auto deposit every month. Maybe it's $10, maybe it's $20, and really work towards putting as much as you can afford to put into that account and just forget about it and have it auto invest. And that's what I do in M1 Finance. That's what I've started doing in September. I started off with $250. I've already added another $250. I'm going to have it auto deposit and auto invest for me every month, a minimum of $250. I also use Tastyworks. You'll see me all the time in that platform. That's for some advanced options. And then I also use Robinhood. I like putting money over in Robinhood because, you get a little bit of interest on your cash, have some cash deployable. And it's really good for like buying fractional shares if you want. And that's another good app. And another thing I like to do in there is buy Bitcoin. I like to try and buy $20 to $50 worth of Bitcoin every month. That's a bit of a diversity that I would recommend. I don't think M1 Finance has that. I know Tastyworks is in the process of getting that. So those are the three brokers that I primarily use right now, and I have links to them all below. With Robinhood, you do get a free stock if you use that link. I think you have to deposit $100. But again, start as early as you can. Don't have any debt. Start off with an amount that you can afford, and then you have no desire to ever touch that for the next 5, 10, 15, 20 plus years. And you're going to auto invest money in there. And you've seriously got to consider this money as money spent. Like you spent it, there's no way to get it back. The only time you're ever going to need it is like in an emergency, and hopefully you never get yourself into that position. All right, so I'm going to hop into the M1 Finance and let's kick this off. Yeah, so M1 Finance is pretty easy to use. They have a really good app. They have a really good web browser. Here we're looking at the app. You can see that I have $479.85 currently in there, and that's because I'm down 18 and 39 cents. And hey, that's, this strategy is dollar cost averaging. I don't care. Again, I put $250 in at the end of the month. I had some extra income on my last paycheck. I put $250 into here. I actually put a lot of money over in Robinhood, ready to deploy. I am a bit worried about the stock market tanking the rest of this year, so I'm kind of trying to be in a lot of cash. So the way you do, and here you can see I have what's called my ETTF. That's the Exchange Traded Tom Fund. I will put a link to that down below. You most definitely do not have to follow that. You can use it as a guideline. There are a bit of speculative stocks in there, some Mary Jane stocks, a couple EV stocks like Hyliion that I've done quite a few videos on. I'm a little bullish on. And we'll take a look at that. So basically what you do is you can set up a pie. You can set up multiple pies, but I would just create one pie, keep it nice and easy. And then you add different slices if you want. Again, I just did one slice. I did this ETTF slice. You go into that, and then you just assign a percentage to each one of the stocks that you want. So in this pie, again, I automatically have $250 every month auto put in there, and then auto invest. Don't even have to think about it. Dollar cost average. The stock market goes down and it continues to go down. I just keep buying it cheaper. Eventually, when it comes back up, all those down months are going to catch up quicker and quicker. And then I'm eventually, even like when I'm back to like my worst month, I should be way ahead, right? And that's how dollar cost averaging works. It's great. There's tons of videos out there on it. So there's some really good ones. They talk about how you could be the worst investor in the world. Pick the worst times in stock market history. You just keep dollar cost averaging and you'll come out way ahead. So again, just find that amount that works for you, auto invest it, forget about it, just treat it like an expense. Every month you have to pay this expense, but you're investing in your future and that money is gone until later when you need it and you can retire rich. It really works. So again, you just set up percentages in this, like I have Tesla 15%, pretty high. Square 10%, pretty high. I'm very bullish on both these stocks. I have a lot of really good blue chip, NASDAQ, Microsoft, Facebook, Apple. DraftKings starting to get a little risky, but I do think there's a lot of growth in gambling, so I'm going pretty heavy on that. Upwork, Disruptor, growth stock, I think it's going to be great. JD.com, really good Chinese. So there is some diversity here. There are 25 stocks. Again, you could set up your own little pie. Do 50 different stocks, different weights, like 2% for this, 0.5% for this, diversify it out, and just every month, just auto invest, let it go, forget about it. Set up as much speculative and growth as you want. I would try and keep that down below like 10% and just go heavy on some really good stuff. If you want to do dividend portfolios, you could do a different pie for that, or just go all dividends. Not as high a return rate, but you're going to get your dividends. Another good investment strategy, but I'm purely sticking to dollar cost averaging monthly. Just buy them stocks that I really believe in. Pretty good diversity. We could be a bit more diverse. And when it comes to diversity, I'll discuss that a lot more going later. I like to be diverse in a lot more than just stocks. I'm diverse in stocks, the type of stocks I have. I'm diverse with options, different option strategies. I diversify with Bitcoin. I diversify with even the futures at times. I diversify outside of the stock market with real estate. Just my own house. I want to get into more. We'll see how this whole real estate thing scopes out as we go, and then maybe I'll put some money into some future real estate if, say, like the housing market crashes. Because when everyone's selling, you want to be buying. It's no different in real estate and no different in the stock market. All right, if you have any questions about this, you want me to, clarify, what have you, again, just treat it as an expense. Start as early as you can. Even if you're young, like 18, working at Taco Bell, good for you. You're learning how to work. Don't spend all your money on clothes and booze like I did and girls, right? Save some of that. Just start investing now, man. When you're young, you're dumb, dude. I was as dumb as they got. I was the smartest dumb person on the planet. And I just I knew I was going to be a millionaire by 30 because I was so dang smart. And guess what, man? 30 comes up quick, and you just wasted like 10 years playing video games, screwing off in college, and just spending your money like an idiot, racking up credit card debt, man. I'm telling you, avoid that. Again, avoid the credit cards. Start early. Truebill, really good. Truebill, Mint, things like that, really good for managing your expenses. So I almost forgot the biggest reason to use M1 Finance and why I highly recommend it. I get rambling. I'm sorry. That might have been an awkward cut, but the biggest thing I love about M1 Finance is its trading window. With the non-premium plan, your trading window, I believe, is at 7 in the morning Pacific. I am in California. The market opens at 6:30 a.m. Your trading window, I believe, is at 7. It places your trades. That's it. You can't trade the rest of the day. You can upgrade, and I think you get another trading window at like half hour before the market close. But that's an invaluable tool because it's just one of those things investors, they're at grips with all the time. Panic selling, trying to time the market, man, you can't do it, right? So if the market's crashing, you're not going to be, you're stuck if you want to look at it that way. But that's great. You're dollar cost averaging, you don't care. Look at me, man. I put $500 in there, $250, the first $250, the market crashed the next day. Couldn't have timed it better. Added another $250 just last week. It's already started to rebound, so eventually this will be ahead. Even if this is the worst timing ever, it might take 1 to 2 years before your worst investment, your worst month is back to even. You've been dollar cost averaging. So those months are way up. So you're probably up overall. And by the time your worst month is up, you're gravy, right? So again, I love that feature. It's great for beginners. And Robinhood, you could panic sell and you could time it horribly. Yeah, so let's take a look at Robinhood. If the market's crashing, there have been times where this has been up really good. So I'm up $1,100 right now. I just dropped some cash over there. I've been doing this for a long time, so I'm a little bit more seasoned at it. But if, the market starts crashing, I might panic sell because it's so easy for me to do. I just hit the stock, hit sell, swipe up, and it's over. M1, it's a little bit more, you're a little bit easier to stay disciplined. Hopefully by the next day, you might still be panicked, but you've just got to have that mindset that this is an expense you've been paying. Long-term it's going to pay off, and you just keep making that money work for you. And because you have that trading window, it makes it a lot easier where something like Robinhood or my Tastyworks story time, right? So in Tastyworks, let me bring that up. Yeah, so I'll make this quick, but just last week, right? Like, again, I have way too much in Tesla right now, a lot of shares, but I'm selling option premium. I'm making a lot of like passive income that way. I'm crushing it. Long term, Tesla's like $300-400 billion company. There's no doubt in my mind it's going to be 2, 3, 4 trillion plus in the next 5, 10 plus years. I've already just set that aside. I forgot about it. It's in my M1. I have like 8 shares in my Robinhood. I love this stock. But just last week, look, I'm up 32 grand for the year in this account, 14 grand in my IRA. And just last week, Tesla, I believe it was last week. Let's take a look. Tesla, Tesla had another bad dip and it was way down. So yeah, it was after market on 9/8, which was about 9 days ago. And I'm just like, and now at that time, my account was only up like 7-8 grand, but I was up for the year. 7-8 grand ain't bad. On like at the time, it was about 85 grand in the account when I started. Up 8 grand, that's up 10% for the year. Really good. I'm like, dude, I'm just gonna cut my losses. I'm gonna forget about it for now. But I held on, I stayed strong, and I almost sold it at the bottom of this dip. It was like 315 in aftermarket. Look what happened the next day. It's already up to 339, and it's been pretty much back on a rocket ship back up since then. But then, it had dipped again. It's back up. Tesla Day's holding this bad boy up with the market down. I'm just going to continue to sell and make premium on that, hold it long term. If I eventually get pulled out of 100 shares with all that premium selling, whatever, then I'll just start selling cash secured puts until I'm put back into it. And I'm just going to keep clocking money that way. So that's a lot of option talk. That's something, even as a beginner, you want to start learning. Subscribe to this channel. I will teach you both. We'll do the easy stuff. We'll do the hard stuff. We'll just do market talk. Again, eventually I want to start doing live streams. We'll do some earnings trades. We'll have some fun, some question and answers. I'm going to wrap this up. I love you all. Peace.